Good morning, SB, Mark. Thank you guys for being here. Triple witching is today. Quarterly expiration of options, futures on options, and index options or something. And then there's quadruple. This may be quadruple witching, actually. Anyway, whatever it is, it's supposedly the biggest or second biggest expiration we've had. Sometimes the option expirations can mark a change in direction. So we'll see if that happens. But anyway, for right now, everything looks pretty peaceful. Pretty peaceful. In fact, S&P has a small gap from, not really, but anyway, come on, S&P, your spy, whoever you are. Check out the Qs. Nice job, Qs. The gap the day before was the clue, or the gap from back here, or from right here. I mean, or from right here. It's just been telling us. I'm just too stubborn to listen half the time, but it's been telling us it wants to go up. That's what all those morning gaps are about, I guess. All right, so let's look at some other stuff here. Look at ULTY. Looks like they're on a new high. Appears to be above yesterday's price. Or I'm trying to think. Yeah, absolutely. ULTY on the new high, and they've been in a major freaking trend, since the past week or so. Since September 10th, they got a bull cross, and they've moved from 541 to 566. All right, let's look at blocks. I bet blocks is doing the same thing. Then we'll go to the actual crypto quartet. Blocks is actually showing down 82 basis points this morning, but still the general trend of blocks has been great. Let's check out a little LFGY. LFGY down 3 basis points. Come on, LFGY. Not quite over yesterday's high. It looks like Alti's a star right now. GPTY and Alti. GPTY is also over the previous day's high. All right, well, that's really good to see. Let's go to the crypto quartet. All right, we'll just start here because it landed here. So what is this? Salty. The one thing we did not check was Salty. Let's kind of look over here at Salty. Now, Salty, on the other hand, is under yesterday's low, trending down, down 63 basis points. Okay, so let's go over the crypto quartet. So here's Salty. For some reason, the thing that shows if it's up or down is not working, but it's down. I'm trying to see if that would make sense. I mean, because it's short 2 or 3 of these stocks that are up a bunch, but it's got a couple of the shorts, right? Anyway, it's down right now. They're on the wrong side of Bloom Energy and APLD. And Symbiotic, ticker is SYM, and they're on the wrong side of Tempest AI. 7.4% of the portfolio is short that name, and right now Tempest AI is up 2.6 points. Okay, right now it just started working. Yeah, now the Salty's actually showing it's all caught up, but they there's some bright spots. What's that one? Is that Astera Labs? I think is what that's called, A Lab or something. Anyway, it's down 3%, and that's nearly 8% of the portfolio. All right, Salty. Well, let's check out Alti. Let's check out your big brother. All right, now looky here. Alti is up more than Salty's down. That's good. Salty's down about 1/3 of a point. Alti's up about 2/3 of a point. The average stock in Alti is doing well, up 2%. As far as standouts go, You got to give it to SMR. It's 5.6% of the portfolio, and SMR is actually up 10% today. Great job. Reddit and OpenAI are pulling back a little bit. You can't win them all. Credo's pulling back a little bit. I'm trying to get these guys, this AI, to save the previous day's alt-D and then be able to give us a report of the allocation, which ones change. We upped the allocation of a firm and we cut the allocation of this. Anyway, but it's not working right now. I'll keep working on that. But let's go over here to LFGY and their chart. Okay. LFGY is not showing. Looks like it's kind of flat. Anyway, their average stock and their portfolio's up. I would expect LFGY to be up also. Didn't we just look at it and it was actually down 3 basis points. It actually was. It was -3. I remember that. Let's see if I was right. Well, now it's showing up 19 basis points. So whatever. All right. Anyway, that would make sense because the average stock in their portfolio is up 36 basis points. They're a long fund. You would think they could squeeze some of that alpha out of some of these names. All right, so that's LFGY. Let's check out blocks. All right, so blocks down 11 basis points. Maybe that's the one that was down a little bit. But I thought it was LFGY. Anyway, okay. Well, why is that? This one is showing HODLs down, FBTC and Ether down a little bit. That'll do it. And also their biggest holdings, Galaxy, and that's pulling back 2%. They also have a decent sized portion of Iron, and that thing's up. All right, blocks. Hopefully you'll be up by the end of the day. All right, so we've looked at all of those, right? We've looked at the crypto quartet. Let's look at the index buffer report. FIVE's up the most. Feet's down, FIVE's up. iSpy is also looking really good today. ZVol's up. Look at old KQQQ. Howard's going to be on. Howard Chen from Curve. KQQQ's daddy is going to be on Tuesday, 2 o'clock Central. So 3 o'clock Eastern, noon on the West Coast. So it's going to be a live, and I hope you guys can be there. YMAG looks good today, as does ULTY. Heck yes, ULTY. Heck yes, you got to love it. And XOVR is looking good. The ones looking bad are GPTY is down a little bit. It's been doing well lately. GPTY's been killing it lately. And feet's down a little bit. Okay, so let's look at the yield max buffer report. Then we'll go to the max factor. If there's a company you want to check out in the max factor, put it in the comments. We'll take a look at it. We'll see where it's at and how it's doing and why it's not higher or why it's as high as it is or whatever the case may be. All right. PayPay stands out. PayPay outperforming on the downside. So, but on the good list, we have Misty, YMAG, Alti, we've already spoken about, outperforming on the upside, and really AMZ. Yep, AMZ's outperforming by about 10% on the upside. Great job, AMZ. All right, let's go over to the new max factor. Still have a few loadings on some of these for some reason, but that's all right because I have a backup right here. Let's let's pull a, oh yeah, I thought this is interesting. All right. Oh yeah, we added a couple new ones, IAUI and BCCC. For some reason, it's not pulling the data yet, but those just got put on there today. So anyway, let's go back over here to this main database and see what's going on with these. Well, their data's over here. It's all right. Let me try this again. Jackson, what are you doing? What do you want? Jackson, you have food over there. Everything's cool. Do you want to make an appearance? Come here. Come here. Let's see you, Jackson. Come on. Jackson, come here. Come here. Get up here. Get up here. What are you doing? What are you doing? Do you want me to? You're super sweet. You're a super sweet dog. But let me get through with this live stream, then we can go do something. Okay. 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 Good boy, Jackson. All right. So I tried to copy that over there. Let's see. Some of these are loading for whatever reason. But anyway, Jax wants to go do something. I should probably go do something. I did just load a really quick short-term list, and it's the same as it was yesterday. But it looks like blocks is moving up. So we have YETH, GUI, Goop, Bobo, and then we have blocks. Look at this. Blocks is 5 right now. XYLG, but that has an asterisk. But anyway, GDXY, you gotta love that. I gotta love that because I have a pretty good portion of GDXY. GDXYs have been killing it. 90 days ago, it was at $15.02. Today, it's at $16.57. So that's up $1, 59 or 55, $1.55, $1.55. Yeah. Anyway, that's great. That comes out to about 10%, which is right there. Volatility is fairly reasonable. 1 year total return of 26.48%. Wow. I mean, that's pretty dang good. Anyway, good job, GDXY. SLVO's right there breathing down its neck. Right there has SLVO has a 33% 1 year total return. QDTY, good to see this one there. It was at 42.57 90 days ago. It's at 45. Don't see any NAV erosion there, do we? Anyway, they all have depletion. I'm just joking. But that one, but when the market's up and it's able to catch some upside, it covers up all the bad stuff. Right there, that's up 6%, just NAV only. You combine that with the 26% dividend, and it's not bad. It hasn't been out for a year yet, but it's another choice. Look at YMAG. We're talking about YMAG every day. It was at 15.11 90 days ago, and it's at 15.87 now. But look at this. Even the best of these, even under the best of circumstances, that's why we say if you're ultra concerned about NAV, don't, NAV return, don't mess with these, or especially don't mess with any of these that pay double digits. Stick with T-Spot, or stick with something that pays in 12, 15 lower numbers. But any of these things that are paying 87 or 35% are going to be a hot mess. It's just the way the math works. But what I'm saying is, even in the best of circumstances, GUI, for instance, that's like a home run. If you would have had GUI 90 days ago, thought that Google was going to go on a rampage, you went from 1156 to 1461 on NAV. That's 26%. That's kind of a best case scenario. Here's Goop from Curve. They went from 2388 to 33. That's a total best case scenario. That's a home run as far as NAV goes. And we aren't in these for the NAV because that, like I say, that's the very best NAV right there. And anyway, hopefully you have lots of other growth assets that get your NAV return for you, because these definitely aren't designed to do that. Let's just go down and take kind of the average one. Let's just go to the middle of the pack. go to about 50s and see what kind of NAV returns we have here. 6%, 11%, 2%, 3%, 2%, 3%, 2, 7, 3. Not bad. I mean, middle of the pack. This is, but I'm saying that's typical. This is kind of what you expect and what you expect on these types of things. Anyway, but these ones at the top of the list are doing great. I'm glad they started working. Okay, so I have a new. Oh, it erased it. I had a new metric. Oh no, my new metric's over here. Oh, now it erased it. Anyway, oh well, I'll show it to you guys some other time. Maybe it's on this sheet. Yeah, there it is. It's called Max's Moxie Index. Anyway, and I didn't try to curve fit this or whatever, but it's just a metric that makes a lot of sense to me. And I put it in, and Alti was number one on the list. And I didn't make it just for like Alti to make me feel better about investing in Alti, but it looks at risk and reward and measures it, and it just looks at everything on the thing. And Alti does have some positive elements for sure. But anyway, number 2 is weak. But anyway, number 3 is WDTE. But I mean, look, that one's making a 40% yield and has low volatility. USOY is also on there. It's all the dogs that I own make the list. But because this metric makes a lot of sense to me, it's just how much yield you get for how much risk you take. Yield divided by risk, and all the ones that I like are on here. But anyway, I just thought that was interesting. But there's some ones that a lot of you guys like on here too. No one would argue that YMAX with the 14% volatility, that's low volatility, relatively safe as far as these go, yielding 70%. I think that a lot of you guys would agree with me that that's a good bargain for the, one of the better ones. I know a lot of you guys like XDT and QDT, same thing. They make a lot of yield for how much risk you have to take. Let's see which ones are the worst on this. They're the ones that pay the lower yields, the steady ones. And I'm not knocking it. It's just a metric, but they're the ones that pay the lower yield, so they're safer by virtue of their yield. But all I was doing is taking yield and dividing it by risk. But anyway, I think that's an interesting metric, Max's Moxie metric. So, but I still stand by that. I think Alti, and a lot of people love TSYY. It's down a little bit lately, but I know people, not a lot of people, I know people that love it. But YMAX is another good one on here too. All right. Well, that's Max's Moxie Index for today. What are you guys talking about over here? Hey, SB, thanks for being here. Mark, as usual. Dividend Degenerate, thank you for being here. Happy Friday. Yeah, it's supposed to be 6.5 trill. What they say sometimes is that not that the event itself that will crash it, but if the market's been going one way predominantly, and then after expiration, then it'll cause, then you can see the reverse happen. Like I remember during COVID, the market was going one way, all of February and all of March until we got to the third week in March. Right? Was that it? And it was option expiration. And it was right about at the low. As soon as that, anyway, but that's a prominent example. But anyway, so the fear would be here, hey, we've been on a ripper. So let's look at this. That's the fear. I'm not saying that's going to happen. Everyone thought that the Fed announcement was going to, it's going to cause a problem. It hasn't yet. Buy the rumor, sell the news. I guess Jay Powell threaded the needle, but I guess we could look. There's a way to look at quarterly expirations, but I don't have it on here. But okay, but I wonder if it worked this year. Now, the April low was made on the 4th or 5th. That wasn't around a quarterly expiration. Sometimes quarterly expirations cause a trend change. That's all I was trying to say. And lots of times they don't. Marcus, what's going back on? Yeah. Who turned Alti back on? Exactly. It just, it had a rough August and stuff, but it's going now. You think a lot are moving from Misty to Alti. So the thing is, now that Alti's, well, here's what I wanted to look at. Let's look at FinViz. I mean, Alti's beating blocks this morning. I wonder what kind of delay there'll be between Alti hitting new all-time highs. And I'm not talking price, but all-time highs as far as the investments going, which is where it's at now. So with dividends, not even reinvested, but just with dividends. And I wonder how that'll correspond with AUM. And I bet it'll be pretty close. So probably a little bit of delay. People see how well it's doing and then load up. That happened last time. Everyone loaded up in August when they saw how well it was doing, and they bought the top pretty much. But anyway, it looks like we went from 3.33 at the highest, 3.35, and that was on mid-August, August 15th. We hit a high, and then by September 12th, about a month later, people were disillusioned. This was the worst thing ever. All the erosion and all this is going to zero and stuff. Anyway, and about $500 million came out of, or about 300,000 comes out, or 250, about $250 million comes out. But anyway, now it's right back up again. Almost the AUM is almost at all-time highs, but I'm pretty sure the equity is at an all-time high. Let's go back and look at it like this. Let's get a daily chart out. Yeah, so Alti's at an all-time high. As far as the investment goes, if you bought it on day one, it's $5, call it. As far as the entire investment, and now it's 567. Not great. It's up, a year and a half. It's up 12% or something. I'm not just saying the world on fire, but it's not going to zero yet either. It almost did back there in April. Oh gosh. Yeah, it almost did. Let's look at LFGY from this perspective. LFGY not quite yet at a high as far as the investment goes. Let's look at blocks. Blocks is killing it. Come on, blocks. Look at that. Holy cow. Holy California, blocks. I mean, blocks pulled back in August too, just like all of them, but blocks just is out of the gate. I mean, just gets right out of the gate. Have you guys seen this yet? Defiance is just on fire. They've this ETHI. So this is part of the new leverage plus income series. The one I care about in here is called QQY. It's going to be the Qs, double leverage Qs, or even triple leverage Qs, but with options sold against it. Anyway, but they haven't come out that one yet, but they came out with ETHI, but it's the same series. And I just saw they came out this morning. It's actually been out since Monday. Investment objective is 6 long-term capital appreciation with the secondary objective to seek current income. All right, so this will hopefully thread the needle, because a lot of people that are using high yield funds aren't income investors. They're young and they're just trading these, whatever. But that's fine. They're really growth investors. They like a little bit of income too. This product should help those types of people in the same way that the Round Hill W series helped those kinds of people. Round Hill W series, great idea. I love it. it only has 20% leverage per week, which is probably a good thing. This thing has 50% per day. So, and all of these are. So these Defiance ones are going to be a hot mess. I mean, they're going to be a hot mess, but they should be fun to watch. So anyway, that came out today. I didn't know if you guys saw that. I would rather, like I say, I would rather them come out with QQI. And then also they came out with the volatility one I was real excited about because it was going to give you a way to get long volatility and work as a hedge. And it happened a month ago, and I haven't had any follow up on it. No one's really talking about it. But I guess we need to compare and maybe UVIC to look at it. I forget this. I think the symbol's VIXI. But I wish they could make one where you could get long volatility and get an income. Why can't you be long VIX plus income? I think one of those may do that, but I think that would be really handy. All right. What are you guys talking about? Stuff that involves me, or are you just talking amongst yourself? Yeah. Okay. Dividend. Thanks. People are moving from Misty to Alti, probably so. And that's what a lot better pick. I mean, anyone that watches Max's Moxie would much rather have the reason Alti's so high in the Max's Moxie is because it's not that volatile for how much yield it pays. Misty is pretty high on Max's Moxie. It's 18th, but it's a 46 vol, but it does pay 160%. I mean, what would you rather have? Would you rather have something that's a 17.5 vol like Alti and pays 135%? Or has been. I realize that the part of that's because the price is going to, but even equalizing for all the NAV issues and stuff, the Alti can make sense, as can WDTE, evidently. We never talk about that one anymore. And triple QI, I've always liked those. But just because they have such and I guess that's why they're on the list. They have a really high yield for the amount of risk at WDT, it's only a 6 vol. Let's look. We never look at WDT. Let's look at that and see how it compares to. This is also from Defiance, and this is their premier S&P fund. So we'll compare this to SPY or something, or another S&P fund. But yeah, we never talk about this one, WDTE. We could compare with QDTE from Round Hill. Let's do SPY first. WDT doesn't look too bad there. Look, it's 2 years old. Oh my gosh, is it really? It is. It's 2 years old to the day. Look at that, 9/18 or 9/19. So this is my channel's is about a month shy of being 2 years old, because I started the channel about a month after I started hearing about these things all the time. These Defiance ones are what got me started, the triple QI. And at the time, this was called JEPY, JEPY. And then JP Morgan sued him or threatened to sue him or made him change their name. All right. But let's look at this. WDTE. It was at $60. Now it's at $33. But it's paid a $36 dividend along the way. So you have $36 of dividend, plus you have $33 worth of stock. It's worth 60. What's that? Yeah, it's worth $66, and you started at $60. So sure enough, you're up about total returns about 17%. But in the SPY is up about twice as much as that. All right. Well, that's a trip down memory lane. But yeah, the 2-year station anniversary is coming up. I wonder what I should do. My first thing was it was November, and it was before Thanksgiving. So it was like November first or second week in November. So here in about 6 weeks, I'm coming up on my two-year anniversary. I should think of something fun to do. I'm at 4,000 subs. I'd like to get to 5,000 subs, but I just don't see it happening. I didn't make any videos last week, and I lost 10 subs. Anyway, but then I got them back because I've been making videos the past couple of days. I made a couple that people liked, and now I'm back to where I was. But anyway, QILD is doing okay, or QLDY. I haven't checked it out. Yeah, it's only been let's at least give it a week. But what I'm more interested in is how in the heck are they? Let's look here. How in the heck? Because they haven't shown their income strategy yet. They're so let's look and see if it's updated on the websites yet, or I should go here. But yeah, Howard's going to be on. Did you guys like Rob yesterday? Man, that stuff. I could do nothing but just do a show where I just used. I mean, I could. If none of my stuff worked, which is usually kind of par for the course, but I could just go to Rob's stuff. All right. So what I was wanting to look at is why isn't QLDY on there? Leverage plus income. Oh, QLDY is not leverage. That's the thing. QLDY, I get it confused because it's like leverage. It's poor man's leverage. But all right. It looks just like GLDY. You would think it's the same thing, but it isn't. Or is it? I wonder if GLDY is doing the lightning spreads on gold. Anyway, all right. Here's what I really want to know. How are they getting their income? Yesterday, they just had their long. They just had some, deep in the money. And it doesn't show any. They haven't published their short. I want to know what their strategy is. They're going to be selling lightning spreads, so there's going to be some type of put spread on here. Just not on here yet, but that's what I'm watching for. Probably be at the end of the day. It'll probably show today's trades. So that's I really want to see how far out of the money are they going with their put spreads. I've been back testing these lightning spreads all night, and they can and for a couple of nights, and they can act like leverage, and they can make it where you can it's possible with the lightning spread to get the full upside of the stock and still pay a dividend. And I've seen in the back tester that's possible. To be up 12% if the stock's up 12% and pay a 20% dividend over like 3 years. It was doing it in the back tester in 5 years. It's possible. So it's an exciting time to be an investor, but I don't know. It's kind of confusing though, because they have the lightning spread product, which is, like I say, it's almost like leverage. It's like synthetic leverage or poor man's leverage or partial leverage or something. But now they have these leverage plus income where they're just literally going to, I think the leverage plus income product, they're literally going to triple leverage the portfolio in the Q's case, or double leverage the portfolio, but then they sell options against it. 100% of the portfolio. They overwrite the whole portfolio, but it's a double leverage portfolio. So they sell, they have 2 courses of upside and 1 course of income, and it should still leave a leftover course of upside. Well, the lightning spread does the same thing, at least in the back tester. Here's my latest back. Look at this one right here. The lightning spread. This is an example over this time frame. This thing, let me see here, 20. This one, yeah. So just buying and holding the market was 140,000. This strategy made 214,000. Of that 214,000, 75,000 was income from the lightning spread part of it. It's over 3 years. It's about 17,000 a year. But anyway, you can pay that income to yourself and get the full upside of the stock and still have some growth in the account. So yeah, the lightning spreads are exciting for sure. But I really think that the leverage long plus income are basically doing the same thing. It's basically doing the same thing, or it's giving you the same effect. It's trying to squeeze extra. It's trying to squeeze some extra income out in a way where the NAV can still flourish to the best of its ability. Let's just say that. Anyway, I'm excited about it. All right, Marcus. Yeah, it's only been a day and a half, but we'll be all over it. I may start just following the trades every day, so we know what kind of dividend it's going to be. But it's going to be paid twice a week, so we could also just watch it get paid, and we'll know pretty soon. So does it move one for one with the NASDAQ, or is it more? So I'm talking about several things here, but on this strategy, I'm trying to, and I think everyone, I'm trying to invent something that's where the NAV will move one for one with the underlying, but it still pays a dividend, but it doesn't come out of the NAV. I mean, it has enough extra alpha from somewhere to pay the dividend without totally killing the NAV. On QYLD, the theory is QLD is going to be just like blocks. Think of it like blocks, because we know a little bit about blocks. We know that the way blocks is, they do excellent in an up market. They're unconstrained in an up market, but in a down market, there's a little tax because of the put spreads, even though they're a defined risk. But when it goes through the strikes, that risk gets added on. Plus, they have the stock. So it's blocks and the lightning spread products don't have a buffer. They're going to have an inverse buffer. In other words, when the market goes down, they're going to go down plus a little, whereas all these other products we talk about all the time goes down minus a little because of the buffer. So that plus a little, but that's the cost for them having the unconstrained upside. And I think the unconstrained upside, when I'm doing back test and stuff in here, that's what you need. The upside has to be unconstrained enough where you can have where you're able to catch extra NAV upside. So you could, because it's still, you're going to pay the yield, and these things pay a high yield, but you need the NAV to go up enough where you can afford to pay the yield. But anyway, I've been working on these strategies, but it's promising. There's some good ones out there. And I'm actually working not only on lightning spread, I'm also working on a leverage strategy on here, or a leverage lightning. You could, here, I'll just show you real quick. Let's see, we'll buy 4 at 50. All right, so this is a leveraged lightning spread. This has 2 parts long and 1 part option selling. So the option selling negates one of the long parts. So you should be left with 1 part long. So you should have your option premium and the full upside. Let's run this over the past 2 years. Leverage lightning. And this is one of the better examples. This one outperformed buy and hold on a risk-adjusted basis and on an absolute basis. It was up 220%, where buy and hold was up 50%. You could look at the income from the spread part of the portfolio, and it's selling the 40, buying the 37. The next step is you have to figure out how much that was. Tasty Trade won't break it out separately from the long, but anyway, so you run that by itself. And as far as their NAV goes, if this was the only thing you're doing, you made about 5,000. It left a lot of money on the table, but this is an income strategy. It's half of the partnership. So this did, as far as an income strategy goes, it won 65% of the time. Largest loss biggest one was $700, biggest losers 1,000, but Average premium is $186, and that's every day over 2 years. That comes to $72,000 over 2 years. So you have to find $72,000 worth of NAV upside to be able to pay yourself that, right? So anyway, we're going to add in the long again here, and this is worth 200 deltas, so it's double long. All right, this is over the past 2 years, and we were going to pay ourselves like $40,000 a year or something. It was like 75, 37. So we'll go back and look at that, and we'll see if there was enough. And yes, you could have easily paid 37. There's only 200,000 in the account. You could have easily paid 75,000 over the 2 years out of this. You had enough in your total profit and loss. You would have still been out. This would have been a dream scenario. You basically made free money here. You got all the upside of the market if you were doing this strategy, plus you got that income. That income, $75,000 on $200,000. So it's I'm trying to think what percentage it is, but anyway, it's pretty dang good, because you could easily, if you were doing this scheme, you could have easily paid yourself. Then what you could do, but 75,000 isn't that much. You could widen these, spread these out. Instead of selling the 40 buying the 37, you could sell the 40 by the 30, and that make about twice the income. Watch, and I bet we can do that and pay. You watch. This would be a more aggressive plan. This is just over the past 2 years also. So, I mean, it's definitely cherry picking. It just happens to be I'm not intentionally cherry picking, but it's been a great time. But it works over the past 3 years, 5 years, whatever. But that's all these funds are trying to do. But look here in this case. Okay, so this one right here, better risk-adjusted reward by a lot. Now, so we have to see how much yield we're going to get. But I bet we could pay all the yield out, or a fund could. If a fund did this, could pay all the yield out, and I bet there's still enough where you would match the return. Without the yield, you would match the return of the rest of it. This is the holy grail, and we're finally, it's taken us 2 years, but we're finally getting here. All right, so actually on the option selling strategy, selling the 40, buying the 30, just doing that, you actually made a little bit of NAV return also. I mean, but you still would have underperformed if that's all you did. But you made, 167% of the time, and $435 per day comes to 170 grand over 2 years, right? All right, so 170 grand over 2 years. Let's add back in our double long. Let's add it back in. And this is what I was trying to get Rob to do. Yesterday when I was saying, could you make multiple legs? Gosh darn it, I bought a put there. Buying puts is that's not a good thing to do. We want to I did a double short. That was a double short plus lightning spread. All right, here's double long. So the double long should give us, all we're trying to be left with is the long left over. We want our income, and we still want the NAV upside. So yeah, on this one, the 170,000, if you took that out of the 507, that would be I would take you down to 330, but you would still have growth first because the regular portfolio took 200 and turned it into 98. This one took 200 and turned it into 507. Yes, 197 of that was income. You could have paid that to yourself, still had growth in the portfolio. Someone needs to come out with this fund. This is the holy grail, right? You guys follow me? That's the holy grail. If I had to pick a top three, what would they be? I mean, Blocks, Alti, and there's so many of them. I like them for different reasons. But right now, at this point in time, the new one, the lightning spread one for sure. Based on the test I'm showing, the lightning spread ones, I think will have a chance to pay a yield and still catch full NAV upside. I mean, they'll have a chance to outperform. It won't be like a total surprise. So I would say the new lightning spread one from Defiance, with the caveat it's only 1 day old, and Alti and Blocks. And I've been pretty, pretty consistent about liking Alti and blocks. I also like LFGY and GPTY, but I haven't switched around a lot of that. But those are the ones I like the most because they do cool option stuff. Those may not be the best ones for you or even the best ones for most people. Probably YMAX or W. I also like WPay. I like the idea of WPay. It's brand new. And I love YMAX. I mean, but I just like the ones that use the multiple ones. That's why Alti blocks, YMAX, WPay, KQQQ, because it's a multiple one kind of. It's doing a good job. But those are the ones I like. GPTY, LFGY, those kinds. So that would be my top 4 or 5. I know you just asked for top 3. Anyway, I hope you guys liked that little demonstration on free money there. I need to make a video and explain that, but I mean, that's the holy grail right there. You need a strategy that, I mean, because that's how erosion happens. Erosion happens when your income strategy makes more money than your equity strategy, than the rest of your portfolio can support. And it may be a temporary thing, but it'll cause, it doesn't mean it's a bad fund, but I mean, but yeah, something like this I think would be better. I don't know why they don't come out with a fund like this. So this would be leverage lightning. Let's look. They're just doing regular lightning on the QLDY. It looks like to me. So, but let's just let me run a test without leverage and see how he would do real quick. Cause I like showing this to you guys. You guys are a captive audience. You guys are listening evidently. So, this is just lightning spread unleveraged. So it's 1 part long, but 1 part premium selling, so, it's because all the covered calls are 2 strategies. They're the stock plus the premium selling. These, they're compound strategies. Lightning spread's the same thing. So right here, you wouldn't have done as well on NAV upside because you just had 1 part stock, right? But I guess I should have just remembered that number. What was the number? It was 175,000 is how much the yield, the spread part earned. So if you paid 175,000 out of these results right here, you would be down under you would have NAV erosion. That this you haven't had enough upside to support the 175,000. However, if a guy was designing a fund and he didn't want to use leverage, what they could do is just put the legs closer together on the spread. Watch this, and then we'll have a fund where I'm interested in income that's distributable, and that's what I'm trying to show. It is the income has to be distributable. All right, so right here, over the past 2 years, this is just the income portion of it. Just the spreads. They lost $9,000 NAV, but they made $101,000 income along the way. So anyway, you could take that $101,000. You could go back here, add back in the long. You can do it. Jay does it with the deep in the money. I was doing it with, anyway, we'll do it. We'll do it Jay's way too. Add back in the long. There's your deep in the money. You got $100,000 worth of income, but will the strategy support that? Is it distributable? So, yeah. And so we had 170, we ended up with 176. So if we took 100 out from that along the way, we would have about 76, and buy and hold it has 98. So we'd be down 20%. It's not distributable. The 101 is a little too much. However, that's why leverage is so important. If you come in here and you do 2 of these, then it's distributable. So I mean, I would just love it if these would start beating the SPY, or at least have the chance to beat the SPY. Right here with double leverage, now it's distributable. You have $100,000 worth of income. So you take that off from 424, you have 324. You, in this 2 years, you could have distributed the $100,000 worth of income and still had NAV growth. So. All right, guys. Well, there's still 8 of you here. I appreciate it. Someone's trying to catch up. Anyway, I think that answered your question, Marcus, on is it 1 for 1? It's supposed to move 1 for 1, but they need to make it where it moves 2 to 1. Once it makes 2 for 1, then it's going to be awesome. I'm excited about the leverage ones. Mike, you're buying the weekly payer CO. Yeah, TSYY is definitely on the pullback, right? Or let's go back here. No, TSYY is right there, but it is down 18% for the quarter. But it's one of the ones on Max's Moxie. So the 32, I mean, it's only a 32 vol with the pays 177. I mean, the reason that week made Max's Moxie is because the vol's only a 0.6. I mean, it's because it's T-bills and stuff. But it pays 4%, but that's not bad for no risk, I guess. Anyway, the ratio matches where it's on there. But the other ones on there is WDTE, a 6 vol paying 40% yield. It's not bad. USOY is a good deal also as far as that goes. But anyway, yeah, TSYY, same situation. Same situation, and it looks like my main sheet quit loading. That's awesome. So copy that. Let's check this out one more time. This is based on this morning's prices. I meant to hit. I'll start it. Okay, so let's look and see if anything switched from this morning's prices. YETH, GUI, Goop, Bobo, Blocks, XYLG, GDXY, Silvo, QDTY, YMAG, NV2, TSMY, SDTY, OARC, QDTY, SVOL, PLTW, XPay, and Biggie. Boy, Biggie's one not to sleep on. I've always liked that one. 90 days ago, it was at 48.5. Now it's nearly at 53. That's 8.9%. So you're getting some NAV, and then they're paying. It's a target fund. I think it pays 12%, but still you're getting that NAV and you're getting 12%. Volatility is low. It's only an 8 volatility. It's lower volatility than the market, so it protects your NAV. It's the full thing. We don't talk often about XDTE, but it's the same thing. It's only an 8 NAV, but it pays 30% yield. It was at 43.22 90 days ago. It's at 44.37. So it's up $1 or so, which is, 2 or 3%. We'll darn sure take it, though. We will darn sure take it. All right, guys, I appreciate you all for being here. Thanks for watching the lesson on leverage and the leverage lightning spread lecture. I need to make a video of that. I wonder if people would like that if I made a video out of it. Probably not. I'm looking for option nerds, and that's why you guys are my perfect target audience. You guys understand all this, but I don't know if a broader audience would. All right, guys, thank you so much. You have a great day, and I will talk to you. We'll have a live stream today at 3. I'm trying to think if we have anything else coming up. But anyway, be here for the live stream at 2:45 or 3. All right, guys, talk to you later.